Welcome back. You're still tuned into Market Fatafat right here on ET Now, and this is a show where we discuss all the stocks that are buzzing in trade today. On the technical side, we are now joined by Mr. Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal Financial Services, and on the technical and on the research side, we are joined by Kanishka and Rabinder. Thanks so much for taking your time out and joining us. Reliance Industries, big boy, that's the one you've picked for us. Ruchit, tell us, what do charts indicate for this one?
Well, we have seen a good uptrend in the stock over last 3 or 4 months, and what the charts are indicating that is the uptrend is likely to continue further from current levels, maybe towards 1600 kind of level, which were the previous swing highs. The stock is consistently trending about its 20-day exponential moving average, high top, high bottom still intact. Running, although overall market seems to be in a consolidation wave, but this heavyweight is likely to give a good support to the benchmark indices, and we could see levels around 1600 in the near term in the Reliance Industries.
That's as far as Reliance Industries is concerned, but a whole host of auto stocks continue to remain in focus on the back of data that FADA has come out with for the entire sector. And first up, they've spoken about their outlook, where they say on the demand front, they continue to remain cautiously optimistic. Two-wheeler segment, as far as this is concerned, early cycle softness has been offset by festive and marriage season demand uptick that we have seen over the last few months. They're saying monsoon is expected to be above normal, and that is expected to aid demand for passenger vehicle and two-wheeler segment going forward. Kharif sowing has been good, because of which rural demand is likely to be very strong going forward. However, heavy rains, price hikes and variant shortages are likely to be some of the headwinds for the sector going forward. But as far as demand is concerned, they continue to remain cautiously optimistic, and on the back of that, the entire sector is in focus today.
All right, moving on from FADA's data to banking pack, that is coming up with its quarter updates. Bank of India is a candidate. Well, let's look at the numbers then. 10.33% year-on-year growth is coming in for the total business to 15,05,669 crores. Global deposits are up by 9.07% to 8,33,000 crores, and the global advances are up by 11.9% to 6,71,967 crore rupees. Now, the domestic deposit also grew by 9.62%, and the domestic advances are also up by 11% on a year-on-year basis. On the back of that, it has given up all those morning gains, is trading towards the lowest point of the day, but nonetheless holding out in the green right now. Bank of India with gains of 0.1%.
Alright, so that's Bank of India for you on the back of operational updates that continues to remain in focus. But let's also put the spotlight on Petronet LNG. Rabinder, there's news flow over here, and the stock is in focus on the back of that.
Well, yes, Motilal Oswal has come out with the note on Petronet LNG, and they have upgraded the stock to buy from neutral rating and high target price to rupees 410 as compared to earlier target price of rupees 315. They say that at current market price, Petronet is pricing in an unrealistic scenario of 20% decline in tariff at both the Dahej and Kochi terminals in FY26, with no tariff hike thereafter and 0% terminal growth. Motilal say that while the concern around a potential tariff cut in FY26 is linger, Motilal highlighted that the sharp cut in the tariff at Dahej in FY28 can lead to industry-wide pressure, as competing terminals were built at 2x at the capital cost, and this will further increase the relative attractiveness of the Dahej terminal, especially as its expanded capacity comes in online. And they assume a 10% tariff cut in Dahej and Kochi in FY28, 4% escalation thereafter, 2% terminal growth and 11.2% WCC. So back of this upgrade, Petronet LNG is in focus, and the stock is holding a gain of more than 2%.
Right, Petronet LNG in focus, trading with gains of 2+% there. But let me come to you, Ruchit. On the charts, you've picked out HUL for us. Now, HUL was also on the radar for Samit. In fact, today, on the back of a note by UBS, the entire FMCG basket is in focus on the back of the Q1 updates that are trickling in. HUL, the top nifty gainer. What do you see on the charts for this?
Then there has been a lot of underperformance, compared to the broader markets rally in last 3 months in most of the FMCG stocks. HUL went through some price-wise corrective phase either earlier than a time-wise correction phase since last 3 months. And today, finally, the stock has broken above its 200-day exponential moving average resistance, that too with very good volumes. So this is the initial signs that the worst may be over now in terms of corrective phase for HUL, and we would see a gradual high water sector formation from here on. So those who are looking to add any positions from a positional perspective, in the FMCG space, then I think being an heavyweight, HUL can be added at current levels with some room to add if we get any kind of dip towards 2350, 2360, which would be acting as a support on any kind of declines now.
Okay, so that's as far as HUL is concerned. The stock is holding up with gains of nearly 3.5%, the biggest gainer on the Nifty 50 index on the back of operational updates. But shifting focus then to Adani Enterprises. Kanishka, some fundraising plans coming in for the company. Tell us more.
That's right. Adani Enterprises is in the spotlight after the launch of its. It has announced the launch of its second public issue of non-convertible debentures worth 1,000 crore rupees. Now, these NCDs will have a face value of 1,000 rupees each. Each application will be a minimum of 10 NCDs and in multiples of 1 thereafter. Now, the minimum application size, that would be 10,000 rupees. Now, this issue opens on July 9th, that is Wednesday, and will offer yields of up to 9.3% per annum, making it a very attractive for fixed income investors. Now, these NCDs are rated AA, that is stable by both CARE and ICRA, and they will be listing on the NSE and BSE as well on July 9th. Now, this follows the company's first NCD issue of 800 crore rupees last year, which was fully subscribed on day one itself. Now, however, following the announcement, the stock is down nearly 1% in trade today.
So that's Adani Enterprises for you on the back of those fundraising plans. But shifting focus to the banking sector then, and a whole host of operational updates that have come in. IDBI Bank, let's put the spotlight on this one, where it has reported mixed set of operational data for the quarter gone by. Net advances grew by about 9.2% on a year-on-year basis. But remember, bank has reported single-digit net advances growth for the first time since the third quarter of FY23. So clearly the pace of advances growth that we have seen over the last few quarters has slowed down in the fourth quarter. Deposits meanwhile grew by about 7% on a year-on-year basis, and CASA ratio for the quarter gone by stood at 44.6%. And now deposit growth too has been lowest that we have seen since the third quarter of FY23. That's when it stood at 4.5%, and this quarter deposit growth stood at about 7%. So on the back of these operational figures that have come in, IDBI Bank continues to be in focus today, although it has recovered from the lowest point of the day, now sitting with gains of nearly 1.5%.
All right, moving on from IDBI Bank to the next counter, that is Cummins India. Ruchit, tell us, what do you see on the charts for Cummins?
So of late we have seen price up move supported by good volumes in Cummins India. Now last two trading sessions the stock has been in a range, and today there are initial signs of a breakout from this entire consolidation phase. The 20-day has been acting as a support. Even if you look at the momentum oscillators, they are hinting at a positive move. So we believe that Cummins would be one stock where we could see some relative outperformance in the short term from current levels. 3300 would be seen as an immediate support for the short term, and till this 3300 is intact, we could see high levels around 3550. So short term traders can look for buying opportunities over here in Cummins.
All right, a short-term buying opportunity for traders in Cummins India. But let's move on to the next counter that is in focus, that's Eternal. Now, a bit of a management rejig coming in there. Aditya Mangla has been appointed as the CEO, food ordering and delivery business for the period of next 2 years. He will be taking over from Rakesh Ranjan. And this isn't the change of roles, it's a signal for the kind of leadership we need as we move into our next chapter. Leadership is not just about knowing what to do, it's about learning how to seeing the invisible cause and effect. And that's what Dipinder Goyal wrote in an email sent to his employees on the back of the appointment of the new CEO. Well, Eternal for now is declining away in trade after the appointment of the new CEO, with cuts of more than 1% in trade.
Okay, so management reject coming in for Zomato Eternal. The stock continues to be in focus on the back of that. But shifting focus to a whole host of telecom stocks that are in focus today. Rabinder, I believe ICICI Securities has come out with a report. Tell us what are the changes that they've done in their report.
Whereas ICICI Security has come out with a note on the telecom sector, where they say that they expect an industry CAGR of 9.8% over FY25 to 30, and telecom companies' market share are likely to remain broadly stable. For Bharti Airtel, they have maintained their whole rating and high target price to rupees 1990 as compared to earlier target price of rupees 1900, and they say that Bharti has remained that top pick for the over 5 years and still remains best bet among the Indian telecom stocks. And for Vodafone Idea, they have maintained their whole rating with target value ₹7, and they believe Vodafone needs some more government support, which has positively surprised in the past, to bridge the immediate cash flow mismatch and retain the going concern status. For Bharti Hexacom, they have downgraded the stock to reduce from hold and revised target price of ₹1780 as compared to earlier target price of ₹1660, and they said the Bharti Hexacom valuation premium to Bharti Airtel is difficult to justify. And lastly, on the Indus Tower, they have downgraded the stock to sell from reduce and with unchanged target price of ₹350. So they have upgraded Bharti Hexacom and Indus Tower, and both the stock is down over 3%.
Alright, moving on then to the next counter, that is IGL, that is in focus today. Ruchit, tell us what do you see on the chart for IGL? The entire oil and gas basket has been in focus. In fact, just today we also have a Citi that has raised its target price for IGL on the back of margin boost coming in. But on the chart, what do you see?
So on the chart, overall structure looks bullish over here, because we have seen the stock going through some consolidation phase over last few months. And in Friday's trading session, we witnessed a breakout from that consolidation supported by good volumes. So it seems that the stock should form a higher top, higher bottom structure from current levels. And in the mid-October, the stock had formed a huge gap around 240 to 45 range. So that gap could be filled now in this momentum, since there is a breakout from its consolidation. So IGL also seems a good buy at current levels for potential near-term targets around 240.
Okay, so we could see levels of 240 on IGL, that's the word coming in. But Kanishka, Adani Ports is also in focus today. Tell us, what's the news flow?
That's right. Adani Ports is in focus because in a step towards green infrastructure, the company has inaugurated the world's first steel slag road at any port. Now spanning nearly 1 kilometer within the Hazira port, the sustainable road connects the multi-purpose berth to the coal yard. Now it is used. It uses processed steel slag aggregates as a byproduct of steel manufacturing and demonstrates how industrial waste can be repurposed into high-performance, durable infrastructure. Now, this project was developed as part of a phase 2 of the bulk and general cargo terminal, that is BGCT expansion, which is in collaboration with Council of Scientific and Industrial Research, the Central Road Research Institute and the Union Ministry of Science and Technology. Now, following this announcement, the stock is up about 0.5% in trade today.
All right. With that, it's time for us to slip in a short break. Don't go anywhere. We'll be right back with more stocks on the other side.
Welcome back. You're still tuned into Market Fatafat right here on ET Now. This is a show where we discuss all the stocks that are buzzing in trade today. So let's get going then. Kanishka, Jubilant Foodworks. This one is in focus on the back of their operational updates. Tell us, how are they?
That's right. It's in focus because of the Q1 update that has come in. Now, the company has posted a Q1 FY26 business update that is broadly in line with our expectations. The consolidated revenue that came in at 2,261 crore rupees, which is up 17% on a year-on-year basis. Now, Domino's India that posted 11.6% of same-store sales growth, which is showing steady momentum, though slightly lower than Q4. However, Turkey operations that remained under pressure for the company, with LFL sales down about more than 2%. On the expansion front, the group added 72 new stores, taking the total count to 3,389 with 61 additions in India alone. However, following this business update, the stock is down over 3.5% in trade today.
All right, moving on to the next counter, Shilpa Medicare that is in focus. Now, a subsidiary of Shilpa Medicare, Shilpa Pharma Life Sciences Limited, has successfully completed an INVISA GMP inspection at Unit 1 from June 30th to July 4th with no critical or major observations. And on the back of this clearance coming in for Shilpa Medicare that is in focus, it has given up all those morning gains, is right now trading in the red with cuts of 0.1%.
Okay, so that's Shilpa Medicare for you. But Rabinder, Cochin Shipyard, on the back of some order wins, I believe the stock is in focus.
Well, as Cochin Shipyard is in focus, where company has signed a comprehensive MOU with HD Korea Shipbuilding and Offshore Engineering South Korea, and the MOU set the stage for long-term operation between two companies in various domains of shipbuilding and maritime development. And the MOU envisages long-term collaboration in the key areas like joint exploration of new building opportunities in India and abroad, and sharing of technical expertise to scale up the global standard in shipbuilding. Third is identification of initiative to enhance productivity and capacity utilization, and joint efforts to upskill and strengthen workforce, and exploration of potential collaboration in other shipbuilding related projects. So back of this news, Cochin Shipyard is in focus, and the stock has recovered 1% of day's low but still trades in red.
Alright, moving on from Cochin Shipyard on the back of that MOU. Kanishka, let me come to you. Another counter that is in focus on the back of business updates coming in. Nykaa, tell us what do the numbers look like?
That's right, Nykaa also in focus on the back of Q1 updates. Again, fairly broad inline set of numbers coming in. Now, consolidated net revenue that is expected to be at the lower end of mid-20s when it comes to the growth, while GMV growth that is likely to cross the mid-20s mark. In the beauty segment, the company said that both GMV and revenue they are set to grow in higher mid-20s, driven by strong traction in House of Nykaa's own and acquired brands. Now, in fashion, GMV is growing in the mid-20s, but net revenue that growth is lagging, coming in at mid-teens. Now, expect some focus on margins and mix as Nykaa is navigating a dual brand strategy across beauty and fashion. Now, following this business update, the stock has been trading nearly 1.5% higher today.
Focus on the back of that, but shifting focus to HAL then. Ruchit, tell us, why have you picked up this counter? The stock is sitting with gains of nearly 0.6% as we speak.
So we have seen that in the last 1 month, we have seen some sideways price action in HAL, but in this entire sideways price action, not seen any kind of volume-based selling happening over there. The 50 DMA has been forming as a good support base for the stock. So overall, we have seen that the entire sector is itself in a bull market, in a bull trend since last 3 months. And HAL, since it has already seen a good consolidation above its 50-day EMA, it seems that the stock could see a resumption of the uptrend very soon. On the high side, possible the stock could rally towards 5,200 to 5,250 range in the near term.
Alright, moving on from HL on the charts, coming to you, Kanishka. Coforge is what you picked out for us. Tell us what's the news for Coforge.
That's right. Coforge shares are in action today after the company revised the share exchange ratio in its ongoing merger with Cignity Technologies. Now, this revision comes after Coforge's recent stock split, and now the new ratio stands at 1 equity share of Coforge with a face value of 2 rupees for every 1 equity share of Cignity at a face value of 10 rupees. Now, the board has approved the amended terms under the scheme of amalgamation with all other conditions like shareholder rights and asset treatment remaining unchanged. Now, following this revision approval, the stock is down nearly 0.2% in trade today.
Rabinder and Ruchit, thank you so much for taking your time out and joining us here today on ET Now and discussing all the stocks that are buzzing in trade today. But shifting focus to some other stories then, India and the United States are nearing a mini trade deal with sectors like dairy and agriculture likely to be excluded from the pact according to officials. Sumita Karir, my colleague, is now joining us with more details on this.
That's right. We're given to understand from sources that as far as the decision on the mini trade deal between United States and India is concerned, well, the ball is now completely in the United States court. In fact, the officials, the negotiating team from India that returned last week from the United States, and now, of course, a decision is impending with the US President Donald Trump. And of course, Donald Trump has stated that he will start dispatching letters to countries. So there are essentially two scenarios that we're looking at. A is a scenario where a letter will be dispatched to India, wherein, what is the effective tariff rate that will be mentioned. And the second scenario is that, of course, a mini trade deal will be arrived at. That will, of course, according to what the sources are suggesting, that should be announced within the next 24 to 30 hours. So India is bracing for these decisions by the United States. As far as negotiations go, well, India has been insistent in protecting its agri, dairy, and even e-commerce sector. In the US has been asking for increased access in these areas, these sectors. But India is, of course, wanting to protect its sectors, some of these sectors. So definitely these sectors from the mini trade deal they could completely be avoided. Other than that, India is not accepting any exemptions on steel and aluminum to come. And there will be an expanded scope of the subjects that are not touched upon in the mini trade deal in the bilateral trade agreement, the first tranche of which both the countries are looking at arriving in the month or in fall of this year. Other than that, we are also learning that there are no further negotiations pending, and of course, the US wants India to cut duties on industrial goods, electric vehicles, wine, petrochemicals, etc.
All right, with that, it's time to wind down on this edition of Market Fatafat. Ashish and I will take care leave. Thank you so much for tuning in. Don't go anywhere because closing trades is taking the market action forward.